Hello and welcome to a new episode of Under 360 English channel. Today we are going to discuss about how to identify multi-bagger stocks and what are the characteristics of multi-bagger stocks. Now let's have a look on what is called multi-bagger stocks. So multi-bagger means the stocks that provide returns that are several times the amount that you have invested in. For example, if you purchase a stock at the market price of 50 rupee or something like that, near to that, and if that has been climbs to some value to say rupees 700 or 800 in a very shorter span of time, to say that's in 12 months or 10 months, something like that. For example, EK Energy, that has been increased from rupees 40 to 1600. So if that kind of phenomenal increase in the share price has been happened, though in that kind of shares, that kind of scripts are usually called as the multi-bagger stocks. So obviously people will be after these kind of multi-bagger stocks because in a shorter span of time they could be able to fetch more profits. There are certain things you have to consider when you try to identify or pick the multi-bagger stocks, because in some cases, though the share price is been increasing, especially for penny stocks also, that may be the activity of some operators. They may take the share price to some higher value, and after that will be continuously dropping. This is not actually we are intended to. Because of the business model, because of its company's intrinsic value, the share price should be increasing. That kind of shares only you can invest with trust. So multi-bagger stocks, those companies' business model, they tend to have unique characteristics such as a strong financial performance or reliable and capable management, efficient capital allocation strategy, and very good cash flows that they could be able to manage. For example, stocks like Eicher Motors or MRF, Asian Paints, Pidilite Industries, Bajaj Finance, which have achieved phenomenal growth over the past few years. All these stocks were given significant returns. One important thing you have to observe here is that these companies' names were not created in a fortnight. It basically took the decades to establish themselves as respected names and pioneers in their respected fields. Even when these businesses were not big names that time, they showed immense promise and growth potential. So investors who were able to spot them and decided to remain invested, they reaped the rewards for the investment. So now the question is, what makes a stock provide such high returns and how do you find multi-bagger stocks? The first characteristics that you have to look into while you search for multi-bagger stocks is the company of a multi-bagger stock that should have a very strong and capable management. So management quality does matter. A business cannot succeed without a management team that is capable and strong enough. So behind the sustainable success of every business, there is a strong management, there is a visionary management. So you can look at multiple aspects like governance practice, board independence, or diversification of funds to other businesses, or for their personal interest or pledging of shares, discipline with obligations and financial matters, how efficiently they are managing the cash. These all things basically determines the strength of management team. I hope you have already seen an episode on management quality that we have released last week. If not, you please go to the playlist and watch it. The second characteristics that you have to look into is about that particular company's competitive advantage. We know that a company can stay in the competition by offering better services or better products as it grows. For example, Madras Rubber Factory or MRF, commonly known as, they started as a small balloon toy manufacturer. Now what's the situation of MRF? And the company has been improvising its products and services as per the demand of the customers. So as an investor, when you try to identify multi-bagger stocks, the question you have to ask to yourself is what products they are manufacturing and what special about those products when compared to the competitors' products. So unique selling points does matter. For that, you have to do extensive research about their products and competitors' products, not just financial numbers. The third important point is about the promoter holding percentage. When you invest in a stock, you do not just invest in the business, but also the people who have started it. If the person who started the business doesn't remain committed to its growth and has defaulted on many occasions, there is a little or no value in even evaluating such stocks. If you find that the promoter holding 90% of the promoter holding is being pledged, or continuously if the promoter is selling his stake, in that case you need not spend time on that particular stock to do research to identify whether that will be a multi-bagger or not. Most probably it will not. So needless to say, substantial promoter holding, that's an essential factor to take that particular stock into your list of multi-bagger stocks. The fourth point you have to consider is about the company should have a healthy earnings growth. We know that ultimately shareholder earns money when company makes profit. So when you look at the earnings of a multi-bagger stock, you will typically find a high growth in the earnings of the company due to its revenue growth model or profitability model, and also obviously the capital allocation model. How effectively the company is using that capital to generate profits. So earnings per share, that's a critical parameter you have to consider. So mathematically speaking, EPS or earnings per share is nothing but total profit or the net profit divided by number of outstanding shares. That will give the EPS. So basically EPS shows how much a company is earning against each share. So EPS should be in an increasing mode. So you take the EPS for the past few years and you just study it. If that's steadily increasing or exponentially increasing, in a few years you can assume that that may become a multi-bagger stock. The next important parameter is about the P, price earnings. So we are not that much giving thrust on price earnings because if a company is growing very fast, most probably the price also start to climb up, sometimes exponentially. So in that case, we can't classify a company that company is not worthy or that may be in an overbought zone just because of the fact that the PE is on the higher side. Sometimes the EPS may not be able to catch up the price, but still that particular company may have the potential to grow. So that's the main reason why I told you earlier that you have to study much on the earnings, not the PE. Next parameter is about the profit margin. Always look for some companies with high profit margin businesses. Usually multi-bagger stocks that have high margins either due to a lack of competition or because they find some means for sourcing the products or services at a cheaper rate and sell that product at a competitive rates. In that way, the profits will be increasing, the profit margins also will be increasing. So look for net profit margin, how much the company has been reaped in the past few quarters or years. And if that's steady or increasing in nature, you can obviously consider that in a positive way. Next parameter is about the capital allocation. The companies, those have become the multi-bagger stocks that usually use their internal funds to expand or launch new products. So these companies also tend to have a lower debt level against equity, so that they generally have a tendency to generate free cash flow. So free cash flow you can find by deducting the purchase of fixed asset from the cash flow from operations. So this cash flow basically is used to fund the future expansions or development of new products or even to pay the dividends. So free cash flow that you have to take it into consideration. If free cash flow is pretty enough good, you always shortlist that company. Next is about the growth potential. We know that a company may not be able to make money or profit in general if it doesn't have a comprehensive range of products or services, as the markets are very much dynamic as well as it's very competitive. So one of the characteristics of a multi-bagger stock is that the management is very vocal about their vision, and they should be able to give a projection of their targets, what they are going to do in the next 5 years, what they are going to do with their product research, how much they are going to invest for that. All those things, if the management can able to give a clear picture in that case, you can consider about investing in such stocks. And the final note about this thing is nothing but in order to reap the benefit of a multi-bagger stock, you should remain patient. Your patience counts. Most probably what happens, you will study about the company, you find that that company is good or meets all the parameters, and you may enter a particular company for 100 rupee. Once the business model start to pick up, the price also may start to increasing. When it reach 120 rupee, you get 20% of profit. You will have a tendency to exit from that stock or book profits. Nothing wrong generally when you think about it, but that stock may have the potential to move up. So if you have done enough studies, enough research on that company, then you should stay invested. Instead of selling, you trade your stop loss so that your opportunities to reap the benefits of a growing company will not be exempted. So you should stay invested, be patient. At the same time, you should be vigilant about the price movement. Find the right time, right price to exit, not in a predetermined or a hurry mode. So that's all for now. See you in the next episode. Till then, bye from Anup.